Hello and welcome to the latest energy market update. Let's have a detailed look at what's been driving prices this week. Brent climbed nearly $1.50 per barrel on Monday as several OPEC members said they want to revive talks about setting new limits on oil production. OPEC are due to meet in September. Previous talks back in April failed to change any output levels. Prices, however, softened on Tuesday as fundamentally the global markets remain oversupplied. Brent continued to fall on Wednesday. Saudi Arabia's oil production rose to 10.67 million barrels per day in July, reaching a new record higher. The weekly inventory report also showed a build in stocks, which added further downward pressure to prices. Despite this bearish news midweek, Brent rose nearly $1 per barrel on Thursday as the IEA predicted the oil markets will rebalance by the end of the year. They said rebound in demand will help pave the way to a sustained tightening of the crude oil balance. As a result of the late rally in prices on Thursday, front-month Brent closed at $45.36 per barrel, up $1.47 per barrel compared to last Friday. Exports to the continent eased on Monday afternoon, which pressured prompt and near-term prices lower. However, rising oil prices and a depreciation in the pound pressured longer-dated contracts higher. It was a similar situation on Tuesday, with prompt prices closing lower day on day thanks to an oversupplied system, whilst curve contracts rose, taking their direction seemingly solely from the weakness in sterling relative to the euro. There was some relief for prices on Wednesday. The system was well supplied thanks to an increase in Norwegian imports and increased deliveries into the Jutton seal terminal. The system's length was offset slightly by ongoing maintenance throughout the UK continental shelf, although prices remained weak. Longer dated contracts also eased as they were directed lower by falling oil prices. Despite prices opening lower on Thursday, they pushed higher towards the close as oil prices gained and sterling continued to weaken against the euro. Last night, near-term contracts closed lower than last Friday, whilst longer-dated contracts posted gains. Summer 17 closed at 37.8 pence per therm, up 0.8 pence per therm compared to last Friday. Most curve contracts entered positive territory late in Monday's session, with prices being driven higher by rising gas, oil, coal and carbon prices. Near-curve contracts tracked their gas counterparts lower on Tuesday. However, longer-dated contracts tracked their corresponding gas contracts higher. Wind generation provided around 7% to the mix, while CCGT was the dominant fuel source, providing around 48%. Prompt power contracts softened on Wednesday as the outlook for renewable generation increased. However, most curve contracts closed flat on Wednesday and then flat once again on Thursday. Last night, prompt and near-term baseload contracts closed lower than last Friday, whilst longer-dated contracts rose. Summer 17 closed at £38.9 per megawatt hour, up £0.3 per megawatt hour. You can download the full version of this report from the Energy Price Information tab on our website. Thanks for watching and we will see you next week.